Hi, this is Rajat Bose here. We are here to give you the stock recommendations and market outlook, and this is our 8th edition. As usual, we are going to treat the three indices, the Nifty, the Bank Nifty and the cnxmidcap. While discussing the cnxmidcap last week, we talked about the lifetime chart, and that showed us that it was showing some topping formation, but the midcap index is roaring ahead. So we would take a review of midcap index very closely. What you see on the chart is cnxmidcap. It's the YTD chart, and again from late March this upswing continues, and never during this uptrend the cnxmidcap 100 index, after it took out the 9-day exponential moving average from below, it never closed below that, and it still continues. As we have seen that it is actually moving close to the upper Bollinger Band. That means the trendiness on the upside, the uptrend has got a lot of strength. So despite the fact that on the all-time chart the Gann angle showed that there would be some resistance, but that resistance was not seen to be acting, there is so much buying in the mid-cap segment that the cnxmidcap continues to move up, and it is quite likely that it will continue to move up. This is the cnxmidcap monthly chart. Here what we showed last week, there had been this 20-year long Gann angles. On that it is superimposed another Gann box, and this Gann box is actually giving you a lot of indication as to what could be the projected levels. This monthly chart shows that 36,000 is likely to be scaled, because then only there will be a resistance. By the way, this resistance is a projected resistance level. This is not carved in stone that this means that there will be a top there, but it is a potentially it could become a potentially strong supply zone. That's what I try to emphasize out here. Now we see the weekly chart. The weekly chart I'm showing to you to show two things. One, the Gann box with Gann arcs. In this we can see that the cnxmidcap is actually doing a great job. For the last several weeks, more than 10 weeks, it has been going up and up. Throughout this upswing, it did not post a single red candle, and currently it has shot up to 35,144. Projected level would be something like 36,000 to about 36,100. So that kind of level we can expect the cnxmidcap to move up to. So another 1,000 point, another 3% run could be seen in the cnxmidcap. So cnxmidcap continues to show a lot of strength despite the fact that it is overstretched, yet its strength is so much, there is so much of buying in the midcap that cnxmidcap 100 index is cruising along. This week the first stock is Cipla. The touchline is caring for life. Cipla, from the COVID lows of 355 to the September 2022 high of 1183, Cipla had a long upswing. It moved up almost 3.5 times. After that, Cipla gave a correction, and now Cipla has crossed its 200-day exponential moving average again. This is embarking on a fresh upswing, the final hurdle of 200 exponential moving average has been taken out. We are going to show you the charts and discuss why Cipla should move from here and how it has built up the momentum. What you now see on the screen is the Cipla weekly chart, and this weekly chart shows that Cipla, after posting a bottom of 355 on March 23, 2020, that was the COVID low. From there it went up to close to about 1180 kind of levels, and then it fell to 850 odd level. That was the correction that Cipla showed after its uptrend got terminated. Now it has already resumed its uptrend, and it has crossed the 50-week moving average as well as the 200-day exponential moving average. It has closed at 1006. Now it is headed higher. Cipla is headed higher. It is going to go up from here. Closed at 1006. I recommend a buy at the current levels. Stop loss placed below 948 on closing price basis. The targets that I have given are 1075 to start with, then 1110 and 1147. This is actually 140 point kind of a run. I have taken the time horizon as 3 to 6 months. Cipla is a slow mover. It could take 3 to 6 months to achieve this target, but now that its recovery is pretty much strong, so it is possible that Cipla will achieve that target sooner than later. The chart that you see on the screen, it is actually the daily chart of Cipla. As I said a little earlier, that Cipla has taken out its 200-day exponential moving average. The last couple of sessions, when market was falling on Thursday, Cipla made a good move up to signal the taking out of 200 exponential moving average. On Friday it added on to that gain, so already 2 sessions above the 200 exponential moving average, and Cipla was trying to clear the 200-day exponential moving average for the last 6-7 sessions. After that, it managed to get past over the last couple of sessions last week. So my point is that Cipla showed a good correction from 1180 to about 1850. A 330 point correction is roughly a 30% correction from the top. So this correction, after this correction, Cipla has been moving up steadily. It cleared all the moving averages. Finally, it took out the 200-day exponential moving average. That's why I tend to think that we are headed higher and Cipla will achieve the target that I've given. It's a modest target, 1147. It's not even the other high, the earlier high of 1180. So next 3 to 6 months, Cipla is likely to perform well. Of course, there can be intermediate correction in Cipla, but the point is that Cipla is likely to scale up and meet all the targets. Put a stop loss below 948 on closing price basis. Stop loss, if hits, please activate it, get out of the position, but once it turns back again, then you should re-enter. But the point is that you should not do this, that you do not comply with the stop loss and do not activate it, because if you take it as a trade for 3 to 6 months, I don't think that anybody invests in a stock like Cipla for 3 to 6 months. That's not the case. So if it is a trade, then you should activate your stop loss if it hits and re-enter again. Re-enter. If you are not confident, re-enter again after it takes out its 200 demo. That's it. But I don't think that 948 would be hit. it is most likely to move up and reach those targets that I have mentioned earlier. The Nifty performed pretty well, but the point is that the Bank Nifty spoiled the show this week. On Thursday, it fell sharply by about nearly 500 points, and that also dragged the Nifty down. We are discussing all this in great detail, threadbare, using all kinds of charts that we normally use. 75 minutes, 125 minutes, daily, monthly and weekly charts, as well as fundamentals, whatever inputs that we have gathered. Keep watching. Now we are looking at the 125-minute chart. In this chart, as you can see, that if you look at the last 6 candles, you will find that the first 3 of those last 6 candles that were red candles, that was Thursday's fall in the market. But what happened on Friday was that the market went gap up and sustained the momentum for the first couple of hours. During the mid session, it actually consolidated, and then the final surge happened. And during the final surge, we saw the index scaled up to almost the all-time high. 18,864 is 0.70 was the high on Friday, and 18,887 is the all-time high. So it was only 23 points short. That was it. So this was a remarkable recovery after the kind of fall that we have seen on the first day. Now when you see the same chart on 75-minute candles, you will find that the day's session, which is the last 5 candles, initially there was a good run up. After that, for the next 150 minutes, that is 2 hours and 30 minutes that was spent, market consolidated. It tested the 9 unit moving average, and finally in the last 2.5 hours the surge happened. When you look at the Nifty YTD chart, the green candle at the top shows that the Thursday's weakness was completely negated, because the day Friday began at a higher level. It started at 18,723, it went up to 18,664, and finally closed at 18,826, and it has closed above the Gann angle. So the weakness that was shown, that wasn't of much importance, because it could not pierce the 9-day exponential moving average. When you look at slightly broader perspective, it is again the daily chart, but not the YTD chart. It is the 1-year chart, and this 1-year chart clearly shows that the Nifty has come a long way. It took from 18,887, that was way back in 2021, and from there 2021 October, from there it came all the way down to 16,828, and now it is very close to the all-time high. So you can see the kind of perspective that is generated, and the Fibonacci levels on the top shows 18,947, and beyond 18,887 there are 2 targets that are visible on the screen. That is 18,947, that's the 1.618 times Fibonacci level, and the next one is 19,257, that is the 1.854 Fibonacci. Now if the index crosses 18,947, then it will cause it will actually clear the 19,000 mark, and the next target will be 19,257. And suffice it to say that till such time the 9-day which is at 18682, and the 20 DEMA, which is at 18563. Unless these two, the range encapsulated by these two moving averages are taken out by the bears, the threats that were there would not really materialize. We have seen that the bears have not been able to take down the Nifty, although the 9-day exponential moving average has been tested quite a few times, but the bulls always make a comeback. Finally, just have a look at the weekly chart. In this weekly chart, what we see is that there are one downsloping Gann angle set and one upsloping Gann angle set, and this is the upsloping Gann angle set that is actually calling the shots, because the downsloping Gann angle set has been crossed at the beginning of this intermediate upswing. Now, even if we are going by the 2 by 1, that means for it is a slow upswing. For 2 units of time, 1 unit of price excursion is happening, that is the 2 by 1 Gann angle. Yet each time we think that it would actually provide resistance, but the bulls are taking the Nifty up using this Gann angle. So the upswing continues with lot of gusto, and the weekly candle is pretty much bullish. So let's see how things pan out. Looking at the weekly chart of the Nifty, you will find that the Nifty continues in its uptrend. While in the first 4 days there had been quite a bit of seesaw movement, as I just told you that there was a heavy selling in Bank Nifty that also impacted the Nifty on Thursday, but on Friday the Nifty moved up, closed up above 18,800 for the first time in this run. It closed at 18,827. The Bank Nifty recovered from lower levels. On the weekly chart, we will see a hammer line there. So probably Bank Nifty might show some rearguard action in the coming week. And the cnxmidcap, as I just told you, it posted a closing all-time high. Individual stocks moved well, and there was an all-time high, lifetime high for the cnxmidcap. So we need to study all the indices in great detail. What you see in the screen, it is the Bank Nifty weekly chart, and this weekly chart gives you a 5-year perspective right from 2019 to say in 2023, how things have panned out. The Bank Nifty, there are 2 trend lines that showed that the downtrend, these are downtrend line. When they were pierced, the upswings happened, and there has been good corrections, and after that the Bank Nifty continues in its bull run. Although in the recent past the Bank Nifty has been showing some weakness. Even in the last week we see a hammer line on the chart. This hammer line suggests that although the 9-week exponential moving average has been tested, but finally the Bank Nifty managed to move up and closed at 43,918. So it is very close to the 44,000 mark, and despite the fact that it came very close to 43,400, it recovered brilliantly on Friday. The kind of fall that happened on Thursday, it appeared as if Bank Nifty is now headed for a good downswing, but that did not happen. Actually, one thing I would like to tell you is this, that till such time the Bank Nifty falls below the range, the critical range of 43,000 and 42,800. 43,000 to 42,800, this 200-point range, unless the bears are able to take it out decisively, the Bank Nifty will continue its bull run. There are no two ways about it. 42,800 must be broken with heavy selling, and there has to be weekly close. Better still, there has to be 2 closes below that 42,800 mark. Only then we can say that this intermediate uptrend in Bank Nifty will will be terminated. This is the YTD chart of the Bank Nifty, and you can see the kind of rearguard action the bulls have actually launched. Bulls did launch on last Friday. On Thursday, there was a huge fall, almost say 400 plus points, almost close to 500 points, and there has been a very good upswing that happened on Friday, and it closed pretty high. It closed at 43,900 levels, 900 plus levels. That was a complete turnaround from what happened on Thursday. The chart you see now is the 125-minute chart of the Bank Nifty, and this shows that the projectile formation that we talked in the last week's video, there this projectile formation and some hint of bearishness is still there, but as we have seen in the weekly chart as well as the daily chart, that the weakness is strongly counteracted. There had been rearguard action, there had been counter rallies. So till such time the Bank Nifty gets past 44,000 and sustains above that, there may be this kind of seesaw movement that can still happen. But as I just said a little earlier, that till such time the 43,000 to about 42,800 major support zone for the Nifty, so long as that holds, so long the bulls are able to defend that, there is no major threat to the intermediate uptrend in the Bank Nifty. On the upside, if the Bank Nifty manages to stay above 44,400, then there could be a good excursion to about 44,600 to 44,800. Those things can happen, but suffice it to say that Bank Nifty has not really diminished its strength. This last chart is the 15-minute chart of the Bank Nifty. It covers time periods between June 5 and June 16. If you look at the right side of the chart, you will notice that there are two huge volume bars in the Bank Nifty chart. This has happened over the last 30 minutes of Friday. Why did this happen? Because from this week, from the earlier week, from the foregoing week, the Bank Nifty weekly futures settlements have been shifted from Thursday to Friday. That's why there has been huge covering, and then there had been a good amount of selling, because some bulls who actually did not want to carry positions, they sold banks, and that's why there was this kind of a seesaw movement in the last 30 minutes. Otherwise, this also shows that how Thursday, look at the 15 at the bottom. You can see that this 15 is actually June 15. There was a sharp fall, and then you go to the June 16. June 16, you will see a gap up opening. After that, there was a dome-like formation, and over the last 1 hour 30 minutes, there had been massive buying in Bank Nifty. Stocks that we are going to use is the 6th largest producer of its products in the world. Its products are used by some great companies, very well-known companies, and it is present in 70 countries, and it is there since 1971. If you like my presentation, don't forget to press the like button. Also press the bell button. Subscribe to my channel and share it among friends, relatives, whoever you want to. And also, please write comments in YouTube. I would answer your queries either on the charts or on the presentation, whatever comments that you have to have, you need to give it. The stock that I am going to discuss right now is Fine Organic Chemicals. This is one stock that I must tell you right at the outset that I am a shareholder too. This is my disclosure that I hold some shares of this stock, Fine Organic Chemicals, in my portfolio. For the first time, I am introducing a stock that is there in my portfolio because it has a compelling story. Fine Organics is the 6th largest producer of oleochemicals. It is an environment friendly chemicals that is used as additives, food additives, feed additives and plastics. Who uses it? Who uses their products? Asian Paints, Bajaj Paints, Coca-Cola, Britannia, Pidilite. Its products are sold in 70 countries of the world, and the company also manages one very good thing, that now none of its customers actually buys more than 5% of its products. That means the company is not dependent on one particular or two particular companies which are its consumers, which are its customers. So that way, that's a very good thing. But this company is a phenomenal company in the sense that its performance has always been great. Its equity is very small, only 15 crores. Its reserves are 1500 crores. And if you go by the screener.in data after the March 2023 quarterly results, its return on capital, that I emphasize, return on capital employed, is above 50%. So we are going to discuss now threadbare Fine Organic Chemicals based on technicals as well as fundamentals, using charts, using return ratios, all that. Fine Organics, I have invested in this company and I am willing to wait for a minimum of 5 years, if not more. I could even wait up until say 10 years from now. But suffice it to say that I am actually recommending this as an investment. Here I suggest you at least go for a couple of years of investments where my projected targets are initially 5660, after that 6644, then 7328, and finally 9388. These levels are derived from Fibonacci projections, and I would suggest you put a stop loss below 4250 on closing price basis. Currently the stock is ruling at 4917. It's a buy for 2 years, and those who want to stay put in this for the longer haul, say 5 years or even 10 years, can well do so. This is an emerging blue chip. It's a strong blue chip company, not an emerging one, and it's a great specialty chemicals company. So I strongly recommend investing in this. But the stop loss that has been given as for investments, generally we do not go for stop losses, but since I have discussed technicals also, 40 to 50 from a technical point of view should be used as a stop loss. The chart at the moment you see is the 1 year chart, 1 year daily chart, in which you see that it is actually coming down from 7328 kind of levels to about 4000. This correction has happened after the major top at 7328 or so. From there it has actually consolidated with a minor gains up to 4400 till about early June. From June, from this month of June, it has actually started moving up. Although it is now on the Gann angle, also it tested the 200-day exponential moving average on the last session, but I expect it to continue moving up, maybe with some consolidation even at these levels. But The targets that I have given here are based on Fibonacci levels, and I expect them to be met over a period of 2 years. But if you want, you can continue to remain invested, because this is a great company. It is going to perform very well. It would ably contribute to India becoming a specialty chemical hub over the next 10-20 years. This company has been performing pretty good over the last 12 months, trailing 12 months up to March 2023. Their profit growth has been, say, about 138%. Return on equity last year had been 49%, 3-year average is 36%. Latest return on capital employed after the March data, according to screener.in, has gone up beyond 50%. Company's sales growth had been 43% on an average for the last 3 years, and last trailing 12 months the sales growth had been 61%. So it's a pretty good company, and its performance has been improving, especially over the last 12 months. It has done exceedingly well. That's why after a correction to 4,000, it has started rising strongly. My disclosure is that I personally hold some shares of Fine Organics in my investment portfolio, and I'm willing to stay put for 5 to 10 years. Now we have come to the end of our presentation for this week. We would like to inform you about one thing. Paying heed to your persistent request for reviewing whatever recommendations we have given, we are going to do that. We are coming up with a special edition of this midweek, this week, middle of the week. There will be review of all or most of the companies that we have discussed over the last couple of months. Thank you.